if you're trying to buy a $500,000 home with a 7% interest rate and a $100,000 down payment, your loan amount is $400,000. And that means that 1 point would be $4,000. And maybe you could reduce, your interest rate by 0.25% with that 1 point. Now, it is possible to pay a ton of points and just get your mortgage rate down really, really low, but then you're gonna have to pay a lot of points to get there. So typically you can have the seller pay for these points as sort of a negotiation tool. So for example, you could say, hey seller, I'll buy your property for $10,000 over asking, but I want you to buy me 2 points in order to reduce my interest rate. So if you give the seller 10K over.
This is a legitimate concept. However, it's very misplaced, very misplaced. The only way to make an interest rate go down, like he's saying, is to do what's called a 2-1 or a 3-1 buy down. And depending on the type of loan, depends on which one of those you can do. So legitimately, you could have the seller pay 3% approximately. There's a formula there. You could have them pay 3% of costs, and that could go to drop your interest rate 2%, thus the 2, for 1 year, thus the 1. So this is not a long-term fix, it's a short-term fix. So the seller can help you, but 2 points are not going to take your rate way down at all. It may drop you to 6%, maybe. So in theory, that's correct, but the practical application that he's talking about, it does not exist.